Good morning and welcome to IG Live. It's a sunny morning, slightly less warm than the last few days here in London. I'm Angeline Ong, and let's get you across the headlines ahead of the open. Australia's economic growth slows. The RBA's rate hikes perhaps have started to bite. And also the dollar versus the Canadian dollar is in focus as markets await a rate decision from the Bank of Canada. Will the hot economy there lead to a surprise hike? We'll have to see. And a crypto crackdown after Binance, the SEC sues Coinbase. We'll get the latest on that story for you. Now let's have a look at the VIX first. We have quite a lot of data that we're waiting on at the moment, waiting on US inflation. And also looking further out ahead, the Fed's monetary policy meeting next week. The volatility index has been moving progressively lower in this narrow bar since the March period and has been coming down towards the 16 level as the uncertainty and concerns about the global economy ease further. Let's take a look at the European markets ahead of the open there. I can tell you that it is looking like another lackluster, treading water sort of open. Checking on the FTSE for you first, down just a touch there. And also the Germany 40, there, a similar picture. And we're probably going to see something quite the same too for the France 40, which is the CAC 40. There you go. It's been quite an interesting period for markets because it looks like investors are waiting on more data before making a decision on a position. Overnight in Asia, most Asia-Pacific stock markets firmed other than Hong Kong's Hang Seng. All this on hopes that China will step in to stimulate its economy. China on Tuesday, if you remember, reportedly asked its biggest banks there to cut deposit rates to boost its economy. And just wrapping up the Wall Street close for you, gains on Wall Street overnight also brighten the mood, not very strong ones, but still building on recent momentum. And looking ahead to the open later on today, this is what the pre-market is looking like on the IG platform. Wall Street indicated here perhaps flat at the moment ahead of that looming CPI number, likely to slow modestly last month. This is what the market is expecting, although core prices still seen remaining elevated. The Fed, meanwhile, as I mentioned earlier, widely seen pausing next week, although a rate hike in July is gaining traction. Now to the RBA and more interest rate action. Back in March, at the end of the first quarter, the RBA considered that its monetary policy was then in restrictive territory. Indeed, the latest GDP data does show that rising interest rates have started to bite. Australia's economy grew at the weakest pace in 1.5 years last quarter. GDP rose 0.2% quarter on quarter, easing back from 0.6% in the previous quarter. Consumers there have become increasingly selective with their spending as well. No surprise given the high inflation. They have been prioritizing essential goods and services over non-essential. Household consumption rose only 0.2% in the first 3 months of the year, contributing 0.1% percentage points rather to GDP. Now, minutes after the release of that GDP data, Australia's Treasurer said inflation was proving more stubborn than initially thought, supporting the RBA's recent decision to hike rates. Unexpected decision, might I add. Since that March meeting, the RBA has hiked its cash rate twice, more taking it to an 11-year high of 4.1%, and it's still flagging more tightening might be needed. And to China now, where exports shrank much faster than expected in May, by 7.5% year-on-year. It was the largest fall since January. Imports fell as well, albeit at a slower pace of 4%, yet more proof that China's manufacturing sector is still struggling to recover. The poor export performance reflects weak demand for Chinese goods, and some economists now believe that in this context of weak global demand, China really needs to rely more on domestic demand. This, of course, adds pressure on its government to boost domestic consumption. Just checking in on some breaking news for you now. Halifax house price index, that's just come through. It is unchanged in May compared to the previous month, down 1% year-on-year. And in Germany, industrial production rose by 0.3% in May, month-on-month, after 2.6% fall the previous month. Now, while Canada's hot economy continues to be in focus, the question now for many investors and traders out there is, will this force the Bank of Canada into a surprise rate hike, much like the RBA? A majority of economists do not think so, but they're pricing in one hike at the BOC's meeting in July. Last time the Bank of Canada raised its overnight rate to 4.5% was in January. Since then, we've had two meetings where the bank decided to hold, as it considered borrowing costs restrictive enough to bring inflation down. Canadian inflation peaked earlier than most in June last year at 8.1% and has since declined to 4.3% in March. But then we had a rebound in April to 4.4%, and this prompted more concerns that inflation was starting to creep up again. The Bank of Canada, though, has room to raise rates sooner rather than later. As I mentioned earlier, the economy is hot and been fairly resilient so far this year. GDP growth for the first 3 months hit 0.8% quarter on quarter. Unemployment rate there relatively quite strong, or painting a strong picture. It's stuck at a 49-year low for the past 5 months. Now, to corporate news, another setback for Boeing. The American aircraft maker warned that it could be forced to slow deliveries of its 787 Dreamliner. Just getting up the chart for you here, Boeing has been creeping steadily higher since this level here in May, rather the beginning of May. It's forming this resistance line at around the 19,600 mark. And you see the solid resistance line that goes all the way back to February. Currently, looking at this chart for Boeing, it's trying to break through that 21,500 level. Now, Boeing recently discovered a new production flaw and now needs to inspect all 90 jets in its inventory and reckons it will take 2 weeks to fix each aircraft. Boeing is an all-session stock on the IG platform, so we'll be watching that stock closely for you. Now, the SEC crackdown on the crypto industry is escalating. The US securities regulator issued a lawsuit against Coinbase on Tuesday, the second in 2 days against a major crypto exchange. On Monday, the SEC targets Binance, the world's largest cryptocurrency exchange. Now, the two cases are of a different nature. The SEC accusing Binance and its CEO Changpeng Zhao of operating a web of deception. As for Coinbase, the regulator considers it is operating illegally because it failed to register as an exchange. If successful, these lawsuits could trigger a major change in the crypto world. As you know, this might, if you've been reading up on Coinbase and what's been happening recently, these lawsuits could trigger the fact that the SEC will be asserting its jurisdiction over it. So far, the industry's argument is that tokens do not constitute securities and should not be regulated by the SEC. Coinbase, an all-session stock on the IG platform, just showing it to you here, fell almost 10% in the previous session. Now, just checking in on oil for you, because this has been a really interesting place to watch recently if you're looking out for volatility, given the Saudi lollipop and also further commitments by OPEC Plus to extend its output cuts and curbs. Crude still, though, despite all that, slightly meandering lower. This is US crude on the IG platform, currently down around 0.5%, trading at around 71.34. API data released on Tuesday evening also showed that crude oil stocks declined by 1.7 million barrels last week, while gasoline and distillate stocks respectively by 2.4 and 4.5 million barrels. And just checking on one last thing for you, because this has also been a very interesting space. Gold, spot gold on the platform, up there for you. Gold, of course, non-interest bearing bullion tends to be less attractive in a high interest rate environment. And the reason why we're looking at gold is because we're counting down to that Fed rate policy meeting next week, trading for spot gold currently in this very tight range between 1937 and around 2067, if you like. A softer dollar also keeping gold supported. And that's it for now. Just a reminder that we have charting at 10:30 and a look ahead to all the trading events for Thursday with me a little later. Until then, follow me on Twitter for all the market moving news. This is IGTV. I'm Angeline Ong.